Hi everyone, and welcome to today's morning report on Monday the 12th of January with me, Rich Perry, market analyst at Handtech Markets. Some very interesting moves actually going on these markets today. The European session has actually started reasonably positively, and that's not really in keeping with what we saw from the close on Wall Street on Friday, and also overnight the Asian markets were fairly mixed as well. There seems to have certainly been a bit of a change in sentiment as the European trading session has gone and begun. The biggest change in sentiment, I think, has come on the dollar and the currency markets. Just to show you first of all the dollar index, which has bounced quite significantly, and that bounce has happened in the last couple of hours, really, as this, as I said, as the Europeans have sort of taken control of trading. And that's had a significant turnaround with the likes of the euro falling, sterling, and also the dollar yen significantly bouncing as well. But another interesting factor is is what's going on in the Antipodean dollars, the Aussie and the Kiwis. So just a very I'll actually show you the Kiwi dollar as my chart of the day in a bit, so I'll sort of talk you through that in a little bit more detail. But certainly there seems to have been a bit of a turnaround in sentiment, and that's a slight amount of surprise because the markets had taken that non-farm payrolls report on Friday. Once they sort of started to digest it, it was seen to be a bit of a negative, really, because of the lack of earnings growth, and certainly the decline in earnings in average weekly earnings of 0.2% was a big surprise. And it was taken as a negative, but certainly today that sort of negativity has been turned around, and the dollar has significantly gained in strength. Now, interestingly, also the volatility on these stock markets remains high. This is the VIX volatility, which has an impact certainly on the S&P 500, and remained high. It started to push higher again on Friday as we saw the S&P 500 fall away. So stock markets remain in volatile mood. DAX is now up 1.1%. FTSE is only up 0.4%, but there's other factors at play here that could be to do with the fact that CNBC have just come to the news with the potential that quantitative easing. They've heard from sources that quantitative easing is being prepared on a contribution basis. So that would be suggesting that the Germans have made the biggest contribution, so they would presumably get the biggest amount of quantitative easing. So that's potentially probably why the DAX is up 1.1% today. Okay, so throughout today, there's no real economic announcements, so we're going to be trading on sentiment at the moment. And certainly, sentiment seems to be fairly positive for equities and and positive for the dollar. And seems to be that's what we're going to be focusing on today. Although you do have the FOMC's Dennis Lockhart, who is a newly initiated voting member on the FOMC in 2015, and he's a dove, and he's speaking at 5:40 UK time, so during the middle of the US session, so it could have an impact there. So my chart of the day, as I said, is the Kiwi dollar. Now, I thought initially when I came in this morning, I was looking at a Kiwi dollar that was breaking this downtrend that's been in place for 3 months, and I thought that was going to be a fairly interesting move. That was sort of going along with the theme of the dollar correction, which had been in place since Friday, but that has been significantly turned around now. We're now left with the fact that we could be seeing a bearish key one-day reversal, which sort of whipsaws the trading sentiment back into strength of the US dollar, and if that is the case and it closes below on Friday's low, which is 77.88. If it closes below that tonight, then that would be a bearish key one-day reversal, and you'd say that that's probably another sell signal. Looking at this intraday chart, this is the last couple of hours where the sell-off has really begun to accelerate. We've already broken the first line of support, which was 77.88. That was that Friday's low, and we're now coming back towards the next line of support. Initially, you'd argue that 77.60 is a small support, but the main support, I suppose, intraday on this chart now is 77.11, which is that low from the 7th of January. If that goes, then you'd probably be seeing a full retracement back towards the lows again, and it certainly would suggest that that would be the low at 76.16. So I've completely had to turn around what my views were on the Kiwi dollar today, due to this sell-off in the last couple of hours. It certainly looks as though the US dollar is strengthening, and Kiwi is down 0.9% or 70 pips at the moment. So a very strong reaction to the downside on the Kiwi. So so in terms of my morning report, it doesn't look as though the chart of the day is very relevant anymore in terms of what I wrote earlier. So just bear that in mind. Anyway, I wish you good luck in your trading today on the Kiwi, and I'll speak to you later. Thank you.